Good afternoon, grade 12 learners. Today we are going to continue with our session on inventory systems and stock valuation. You will remember last time we spoke about the first in, first out method. Now today we are going to talk about the weighted average method for stock valuation. Before we do that though, I would just like you to go back in your workbook to activity 1. Last time I made quite a silly little mistake there, and I want us to correct that. In activity 1.3, I said when there was a theft of stock, we for some or other reason said stock loss with asset disposal. That should obviously be loss with theft or loss with stock stolen or something like that. Okay, if you can just correct that in your answer book. Okay. So let's continue with today's session then, the weighted average method. Now the main difference between the first in, first out method. That means stock purchased first will be sold first. In other words, our closing stock is then the stock that we purchased last. Okay. Weighted average method, we work out an average for all the stock available. So before we get started with the activities in your workbook, I would just like to go through some simple examples to explain that. Okay. So just to recap what we are doing, inventory systems. For inventory systems, we have the periodic inventory system and the perpetual inventory system. Then inventory valuation, the FIFO, first in, first out method, and the weighted average method. And then the ratios that we use with regards to stock is the rate of stock turnover and the stock holding period. Okay, so let's look at weighted average. For weighted average, we calculate the average cost price per unit by saying it's the total cost of purchases up to date divided by the number of units purchased up to date. And this formula will obviously influence the value of the closing stock, the gross profit, because it influences the cost of sales, and then also the value of your current assets, as stock is a current asset. So let's look at an example. Same example that I used last time for first in, first out, but this time we're going to use the weighted average. Let's say we buy 10 mugs at 10 Rand each. These are 10 mugs. So the cost for those 10 mugs will be 100 Rand. Now we purchase another 10 mugs, but this time the cost is 15 Rand. So the total cost for that, 150. So now, using the weighted average method, remember last time, first in, first out, we said we sold 12 units, and then we said we're going to sell the first stock first. But now we're using the weighted average, so we need to calculate an average price for all of those units. So how many units do I have? I've got 20 mugs. What's the total cost for those 20 mugs? It's 100 plus 150, in other words, 250. So how will I now calculate the average price per mug? Okay, that's relatively easy. It's the 250, the total cost, divided by the number of units, 20 mugs. So if I do that, I get 250 divided by 20 gives me 12 Rand 50 per mug. So that 12 Rand 50, in other words, is the weighted average cost per mug. Okay. Another example. Exactly the same example we used last time for first in, first out, but this time let's make it applicable for weighted average. Okay, so let's say the question is, calculate the cost of sales and the value of closing stock if the perpetual inventory system is used and the weighted average. Before we carry on, I just want to show you something again maybe. Remember, there's 4 systems that we can actually use. It's the FIFO, periodic. Then we've got the FIFO, perpetual. Okay, we dealt with that last time, perpetual. Then weighted average, periodic, and weighted average, perpetual. So So there's 4 different ways to calculate cost of sales, closing stock, and gross profit. Okay, so we are now going to do this one. Weighted average, perpetual. Okay, so let's carry on. For perpetual, we must calculate the cost of sales, should be calculated every time that sales takes place. Okay, for periodic, you calculate the closing stock. For perpetual, you calculate the cost of sales every time sales take place. And then, when that happens, you need to calculate the weighted average. And average price is calculated every time there is sales. For perpetual, weighted average. So for this example, let's go and do that. So we will start with an opening balance of 5,000 rands. That consists of 100 units. Okay, so that's our opening stock. Then we had purchases. 20 units was purchased for 1020. So that will obviously be written on the debit side as well. So it's the opening balance plus the purchases on the debit side as it increases the trading stock, which is an asset. Okay, then there was purchases again. 30 units for 1560, also on the debit side. Okay, now, what happens now? Sales of 15 units. Now remember, what did we say? If it's perpetual, you need to calculate cost of sales every time that sales takes place. And we now need to do that by calculating the average price of the units available. What are the units available? Let's look at that. We've got 100 units opening stock plus 20 plus 30. So the number of units available is 150 units. What's the total cost of that 150 units? It's the 5,000 plus the 1020 plus the 1560. So it is 7580. So how will I now calculate the average price? It's relatively easy. It's the 7580, the total cost of the units available, divided by the number of units, the 150 units. So there's my calculation. So I get that the weighted average cost per unit is 50 Rand and 53 cents. There you go. So now, if I do my cost of sales, what will I say? My cost of sales then is the average price per unit times the 15 units. So it is 15 times 50 Rand and 53 cents. My cost of sales. Okay. So in other words, now I had 150 units. I've sold 15. So now I'm left with 135 units at that average price. So I don't look at them separately anymore. I now have a new average price for the 135 units because I don't know which of those I've sold. It's not like the first in, first out method. Okay, so let's carry on. So there was purchases again. We purchased 50 units. So that will go on the debit side once again as my trading stock increases. And then we had sales again. Now we have sold 100 units. So remember, what did we say? Every time that sales takes place, you need to calculate a new average. Why can't we work with that average anymore? Because there was purchases again. So now the average cost price of all my units available has changed. Okay, so how will we do that? Let's see. Let me do that. Okay, there we go. What's available? 135 units plus 50 units, so we have 185 units available. What's the total cost of that 150 units? It's the 6822 plus the new ones that we've purchased, the 2750. So how will I calculate the average price now? 9572, total cost of units available, divided by the number of units. So my average price now changes to 51,74. Why does it change? Because there's now sales. Okay, so let's go back to our, let's first do that. So it's 51,74 If we now go back to our T account, we see that cost of sales is now that 100 units times the average price per unit that we've just calculated, and there we get the cost price. Why on the credit side? Obviously because cost of sales decreases my trading stock. Okay. So, very important, we are busy doing the perpetual weighted average, and that's why we're doing this T account. Because we're doing the perpetual, it says we need to calculate cost of sales whenever sales take place. Okay, right through the year. So only now, after I've done this, now I can, okay, that's the units still that we still have left over. 85 units at 51,74, and only now I can calculate the value of my closing stock. Okay, if we do the T account, we said this is all the increases that took place minus the cost of sales. So now we say we add the debit side, we carry it over to the credit side, and my balance then 4398. Okay, it's the same as if we go back, you'll see it's that amount there. Okay, the value of the closing stock. So we first calculated cost of sales and then closing stock. For periodic, it's the other way around. Let's look at that. Same question, but this time it's periodic weighted average. The previous one was perpetual weighted average. So what's different? For periodic, you first calculate the value of the closing stock and then cost of sales. Remember, for perpetual, it was first cost of sales, then closing stock. So now it's the other way around. And weighted average means we are going to calculate an average price per unit for the closing stock. So let's use the same example, but now it is the periodic system. So weighted average, we need to go and see what's the total cost of units available for sale. Let's see, it's the opening stock plus the purchases. That's the total cost of the units that was available for sale. So if you add that, you will get 10330. How many units is that? Because we now need to divide by the number of units. So let's see. The number of units is the 100 plus 20 plus 30, that's 150, plus another 50 units. So in total, we had 200 units available for sale with a total cost of 1,330. So that will give me an average price per unit of 51,65. We always round off to 2 decimal places. Okay. So now, can we now calculate the value of our closing stock? Yes. Can you remember how many units did we not sell? How many did we have to sell? 200 units. Okay, so how many did we sell? 15 plus 100, it's 115. So 200 units minus the 115 that we've sold, so our closing stock is 85 units. So now we can go and we can calculate that value by saying 85 units, closing stock, number of units, times the average price, because we're using the weighted average method, is 4390,25. Okay, can we now calculate the cost of sales? Yes, because we have the closing stock. We can now say minus the closing stock. How do we calculate cost of sales? Opening stock plus purchases minus closing stock. When do we do this? When we use the periodic inventory system. So the cost of sales then is 5939,75. Okay, I think you'll agree with me. This is a lot easier than the perpetual. But I mean, even the perpetual, it's not that difficult. Okay, so let's see. If we compare these different methods with each other, you will see that for the FIFO method, the value of the closing stock and the cost of sales amount is the same. Do you see? But when we do the weighted average, it's different from perpetual to periodic, and it's different from the FIFO. And that's why they say the way that you evaluate your stock will have an influence on your value of your closing stock, and your cost of sales, and therefore your gross profit. Okay. And then let's just quickly look at this as well. These are the two ratios that you can use, that's often asked with these questions in the question papers. Stock on hand, or sometimes it's called the holding period. It's your average stock divided by the cost of sales. How do we get average stock? It's the balance of my stock at the end of last year plus the balance of my stock at the end of this current year divided by 2. Okay? If they ask the answer to be the number of months, then you will say times 12. Or if the question says number of days stock on hand, you will obviously say times 365 over 1. Okay. So let's get to your questions now that you have in front of you. And we're going to start with activity 3. And it's quite a nice question. So let's read there, question 3. And once again, use your highlighter when you do accounting. It helps a lot for you to see what of this information is important. Okay. They say, you are provided with information relating to Fit World for the year ended 28 February 2012. The business is owned by Fiona Fit. They sell energy drinks, energy bars, and T-shirts to retailers. Fiona employs Cheryl to manage the energy drinks, Kelly to manage the energy bars, and Tiffany to manage the T-shirts. You will see some of this information is given in activity 5 as well. Okay, now they say, this question is only with regards to the energy drinks. Refer to the information relating to the energy drinks and calculate the following. The value of the closing stock using the weighted average method. You will see in this activity, they don't tell you whether it's perpetual or periodic. Okay. But then they ask you to calculate the value of the closing stock. So I think that should give an indication that we should use the periodic inventory system. Okay, inventory system. Okay, so let's go to your answer book. Your answer book should be open now as well. Then to question 3.1. Calculate the value of the closing stock using the weighted average method. Okay, so what information do we need? We need to have the total cost price of the units available, and we need to have the number of units. So if we go to our answer, let's see. This is the information that we have. Okay, the total units, or the amount for the units. Okay, first of all, it is the opening stock of 2880, and the number of units is 320. So on our answer sheet, we will now say total cost for the opening stock 2880. Ooh, I need to get another pen. Let's use this one rather. How many units is that? That is 320 units. Okay. Now, how many purchases took place during the year? 58560. How many units is that? 4,800 units. Okay, so we're going to add that. So we're going to say opening stock plus all the purchases. 58560. How many units is that? 4,800. Okay, so if we now do that, we will get 2880 plus 58560 should give us 61440 divided by 320 plus 4,800, 5120. Okay, so we say on our calculator 61440 divided by 5120, and that will give you 12 Rand per unit. Okay, but now we've only got the average cost per unit. We still need to calculate the value of our closing stock. So now we need to know what's the number of units in our closing stock. And here they tell you, closing stock, Number of units is 2,400, but they don't give you the average price because that's what you've just calculated. So now we can say 2,400. The value of the closing stock is then 2,400 times 12. Okay, and that will give you 28,800. So once I have the value of my closing stock, I can now continue to calculate the cost of sales and the gross profit, and that's exactly what they want you to do. Look here, in the next question, 3.2, they say calculate cost of sales and the gross profit, and they say you may use a trading account to calculate these figures. Okay, so let's do that. I prefer using this method. This is the same as the note for cost of sales when you use the periodic system. So the opening stock. Can you remember what the opening stock was? It was 2,880. So opening stock 2,880 plus all my purchases 5,850. And then they said there was some stock written off. It could have been damaged, it could have been stolen. Okay, so now you need they actually gave you the amount. They say that the amount for the units written off is 210. So you will then deduct that. What if they didn't give you that amount? Then you would have calculated, used the average price per unit to calculate the amount for the units written off, because they told you it's 20 units, and then you would have said 20 times 12, but here they gave you the amount. Okay, and now very important, minus the closing stock that we've just calculated over there. Okay, so we say 2,880 plus 5,850 minus 210 minus 28,800, and that will then give you the cost of sales. And you should get an amount of 32,430. Okay, let's quickly look at some questions here. What do we do with the returns and the custom duties? That's a very good question. Okay, let's go back here. We've spoken about returns. You will deduct the returns. If there was custom duties, you will add the custom duties to the total cost of the units available. So let's say there was custom duties or carriage on purchases of 4,000 Rand. You would have said that plus the purchases plus the 4,000 Rand. Okay, I see in this question, very interesting. When I did this, I thought that you would deduct the returns, because they gave you the value of the returns. And then when I looked at the memo, I saw that they did not do that. No, the only thing I think, the reason why is because you don't always have the value of the stock that was stolen or written off, because you don't know if it was old stock or new stock. And I think that's why they did not deduct the returns or the units written off. Okay, so they took the total stock available to get the average price. But in this case, they actually did give you the amount. So I think if you did deduct it, it would actually be taken as correct as well. Okay, but that's a very good question. Thank you for asking. I think it looks like Chuma who asked that question. Could you please repeat more times to help clarify what you are saying? I'd love to repeat more times, but I'm afraid then we are not going to get through all the questions. So what I suggest we do is your teacher will get a DVD of this session, and I suggest that you get the DVD from your teacher and then ask him to take it home, and then you can take me home and you can rewind me and play me over as often as you would like. Okay. Okay, carriage on purchases, we've answered that. When do you divide by 2? Okay, we're going to get that later. Okay. You don't have to repeat. Okay, thank you very much. Okay. Let's carry on then. Okay, so now we've calculated the cost of sales, and the next part of that question is gross profit. So how do we calculate gross profit? We say sales minus cost of sales that we've just calculated. You will see often in the questions the one leads to the other. Here we had to calculate the value of the closing stock, then we use that to calculate the value of the cost of sales, and now we're going to use that to calculate the gross profit. Okay, so in the question they give us the sales. There it is. The sales was 57240. So sales 57240 minus the cost of sales that we've just calculated, 32430, equals the profit of, let me see, if we do that we get 24810, the gross profit then. Okay, so let's carry on. The next question said, calculate the markup percentage. So now this question leads to the next one, because we need the gross profit and we need the cost of sales to calculate the markup percentage. Do you see? So this was really quite a nice question. So there we go. The markup percentage. How do you calculate markup percentage? By saying gross profit divided by cost of sales, and you want your answer as a percentage, in other words, times 100. So we've just calculated the gross profit. There it is, 24810. So we say 24810 divided by the cost of sales. There it is, 32430. That's the cost of sales that we've calculated. 32430. Then we calculated the cost of sales. So we say 32430 times 100 over 1. Okay, so if you do that calculation, you should get 76.5%. That's the markup percentage. Okay, now the next question says, calculate the average stock turnover rate. One of you asked, how do we calculate the average stock? So we're going to get to that now. So once again, here we use that's the ratio that you use, the formula that you use. So cost of sales, there we have cost of sales, is 32430 divided by the average stock. Now the average stock is the opening stock plus the closing stock. So the opening stock, you will remember, was, let's quickly go back to that if I can find it. There it is. The opening stock was 2880. Okay, so it's 2880 plus the closing stock we calculated in 3.1, the closing stock 28800 plus 28800. Okay, so if we now do that, we get 32430 divided by 2880 plus 28800 divided by 2. That should give you 15840. So 32430 divided by 15840 will give you 2,1 times per year. What does this mean? That means this is how often they need to replenish their stock. That's how often they need to purchase stock, is 2,1 times per year. Okay. Okay, that was question 3, and we are doing very good so far. So I hope that we can finish all the questions today. That would really be great. Okay, so let's carry on to question 4. It's a bit more difficult than this question, and it also counted a lot more. And yeah, let's look at it. Then I'll explain as we go along. Okay, and it's often asked like this. Let's look at it. It's also, okay, let's read from the start. Sorry, let me just go to questions again. If written off was not given, okay. If 10 Rand 50, the unit price of goods written off was not given, how were you going to calculate the value of the 20 units written off? You would have used the weighted average that you've just calculated times the number of units written off. Okay. The markup is 76.5%. Thank you. Does the inventory always ask together with only these two ratios? Yes, these are the two ratios that we use. It cannot round off to 2,1. Okay, let's just do that again. Just let's see. Just make sure it's 32430 divided by 15480 will give you 2,094. Okay, so that can actually round off to 2,1. Okay, I hope I've answered your questions on that. Okay, so let's carry on to activity 4. You are provided with information relating to Protea Traders owned by Dion de Villiers for the financial year ended 28 February 2012. The business is situated in Cape Town. Dion buys and sells cricket balls and jerseys, and the business uses the periodic inventory system. The cricket balls are bought from South African suppliers, and the cricket jerseys of different clubs and countries are imported from overseas. He employs salespersons to control each item. Jack controls the cricket balls, and Charles controls and sells the cricket jerseys. Dion, now this is very important. Dion has decided on the following accounting policies for valuing inventory. For cricket balls, he uses the weighted average method. For cricket jerseys, he uses the first in, first out method. And this is why I say this question is a little bit more difficult, because now in one question you have to do the two different ways of valuating your stock. Okay, so let's see. The first one says, although this business has done well, Dion is considering closing it down and investing his capital on fixed property. State 2 points that he should consider before making a final decision. Okay, now I know that you guys don't like answering questions like this, but it's very important. This is actually where you can score marks, because remember, this is an opinion that they're asking. So most of the times, it's your opinion. So most of the times you will get your marks for that. So please, don't leave an open space there. Try to write something, and you will see it's so easy. Why? What should he consider before selling his business? If you think about it carefully, before going into property, you should first make sure that before going into property, that what's going on in the property market at the moment. Let's look at the answers to that one. Here, I've written down some of it for you. Okay, first of all, you should look at property prices. Is now a good time to invest in property? Are property prices expected to increase in the future? Okay, so that's something I'm sure you would have thought of that. Other things that he could consider is, what's the implication for the staff if he closes down? That means retrenchment will take place and they will lose their jobs. Okay? And something else that he should consider, will he receive a good and fair price or value for his business? Okay, so this was relatively easy, and I'm sure you would have been able to done that. Okay, 4.2. Dion suspects that a number of the cricket balls have been shoplifted. Calculate the number. Remember, this is not a value, it's the number of balls stolen. So if you go to your information sheet, let's go there. Let's see. This is now cricket balls we are talking about, so don't get confused between the two. So we're only going to look at that first, the cricket balls. Okay. The opening stock, the number of units at the beginning and the end of the year. That's the information that was given there. The stocks that were valued as follow at the beginning and the end of the year. So that's the opening stock, that's the closing stock. Okay. The purchases, these were all the purchases, and they give you the total purchases there. Okay. And this is the sales. So you first go and assess what information was given to me. So where are we going to start? We need to calculate the number of cricket balls that was stolen. So we're going to start by saying we had 1,200 units at the beginning of the year. How many did we purchase during the year? 3,400. So in other words, 1,200 plus 3,200 is what? 4,600 units that we had we had available to sell. How many of those did we sell? Here they tell us. Cricket balls, 3,005 units were sold. Okay, so now we can calculate how many units should be on hand. So let's go there. 4.2. So let's go see again. It's the how many units did we have on hand at the beginning? 1,200. How many did we purchase during the year? Units purchased during the year was 3,400. So that's what we had available for sales. The 4,600. How many of that did we sell? Minus 3,400. So in fact we should have 1,100 balls in the closing stock. But now, if you go to the question, you will see how many units do you have in your closing stock. You only have 900 units. So that means the other units is missing. So 1,100 is what we should have. How many units do we have? Only 900. So the difference, in other words, the 200 balls difference is missing. Okay. So that was relatively easy. Okay. Next one. 4.3 says, let me just go there. Use the relevant information to calculate the closing stock value, that's what's asked, of cricket balls using the weighted average method, cricket jerseys using the first in, first out method. Okay, so let's first look at the cricket balls. We are going to use the weighted average method. Okay, so we need to go and see, first of all, what's the total cost of all the units available for sale divided by the number of units. Okay, so if we go to our information sheet here, you will see opening stock was, total cost was 144,000 rand. How many units is that? 1,200 units. So we will say 144,000 rand. How many units is that? That was 1,200 units. Plus. Okay, the purchases now. Purchases was, let's see, there we go. 502,000 rand. How many units is that? 3,400 units. So plus 502,000. Okay. And that is 3,400 units. But then there's something else here that's very important that you had to pick up. Here they said, carriage on purchases during the year. The business paid a total of 30,200 to transport cricket balls to the shop. The price of the cricket jerseys include carriage. So what does this do to the cost price of my cricket balls? Remember, one of you asked me in the previous one, what about carriage on purchases or custom duties? So can you remember what I said? We now need to go and we need to add this 30,200 to the cost of the cricket balls because it increases the cost of the cricket balls. So we're going to say plus 30,000 plus 30,200. Okay, so if we now go and do that, we add those at the top. We get 676,200 divided by 1,200 plus 3,400 is the 4,600 units available for sale. We get an average price of 147. Okay, now how many units is in my closing stock? Units in my closing stock is 900. So we will say 900 times 147 equals 132 300. So what is it that we've calculated here? We've now calculated by using the weighted average method, the value of the closing stock. Okay, I've actually just thought of something. Remember, one of you asked me in the previous question, what about the balls getting stolen? Why don't we now deduct that from here? Okay, because for the periodic inventory system, that will have an influence on your gross profit. And you will only see the effect it has there. So you don't deduct it here. You still look only at the units available for sale that you purchased plus the opening stock divided by the number of units. Okay, now let's go to the cricket jerseys, because now we're going to use the first in first out method again. What does first in first out say again? It says the units purchased first will be sold first. So in other words, the closing stock, let's go to the question. There it is. What is the closing stock? Is 250 units in my closing stock. That will be the units that we purchased last, in other words. Okay, so we're going to say we have 250 units in our closing stock. Of that, what was the units purchased last? Let's look at cricket jerseys. Units purchased last was 100 units at a price of 300 per unit. So it's 100 at 300 per unit. That will give me 30,000. Okay. And then how much are we still left with? So we've now done 100 of the 250, so we're still left with another 150. So that will be the units that we purchased second last. Okay, so let's look at that. Units that we purchased second last, there was 1,400 units purchased, but of those, that means we've now only got 150 left at a price of, what was that again? 255. Do you see? That was purchased second last, so the other 125 is from those units at a price of 255. So in other words, 150 times 255 should give you 38250. Okay, so the value of the closing stock is, if you add those two, you will get 68250. Okay. Let's just look at the questions. Value of the closing stock was given. You will make a lot of sales in Cape Town. I agree with you. We like soccer. Okay. Let's carry on with the questions then. So we've done 4.3. 4.4 says, calculate the following, and very important, go and highlight this for yourself so that you don't make a silly mistake by doing the wrong one. Calculate the following for cricket jerseys: cost of sales, markup, and stock turnover rate. Okay, we have to hurry up now because we are running out of time, and I'd love to finish this question. Okay, so calculate the cost of sales. Once again, we are going to use this method by saying it's the opening stock. The opening stock was given to you there. Opening stock 166,400. Okay, 166,400 plus all the purchases. The purchases was given to you as well in your question. They've added it for you. 602,000 plus 602,000 thousand. Okay. Minus the closing stock that you've just calculated in the previous question. 68250. Remember the one we did just now? We got 68250 as our closing stock. Okay. So now if we say 166,400 plus the purchases minus the closing stock, we get 700,150. Okay. So the next question now asks, what is the markup on cost? Now we've just calculated the cost of sales, so we can go and write that in there immediately. But we don't have the gross profit. Now gross profit is calculated by saying sales minus cost of sales. Okay, but what's the sales? Let's search for that. Here under sales, what are we working with? Not the cricket balls, but the cricket jerseys. The total amount for sales is given as 1108,000. So 1108,000 divided by 700,150 gives us a gross profit of 407,850 divided by the cost of sales 700,150. But remember, we want our answer as a percentage. Actually, I forgot about that there. Times 100. So that will give you a percentage of 58.3%. Okay. Stock turnover rate, cost of sales, once again, is 700,150 divided by the average stock. Average stock is half of the opening stock, which was opening stock 166,400 was my opening stock, plus my closing stock 68250. Okay, so I've got 700,150 divided by, if I do that, I will get 117325. So that will give me 6 times per year. Okay. So now the next question says, let me just put this away. If Dion decides to continue with this business, what advice would you offer him? State 2 points and quote financial indicators or specific information from the question to support your answer. It's very important always when they ask a question like this, after you've now done all these calculations, quote figures, because you get marks for that. Okay, now the memo said the following. Let's look at the possible answers you could have given. Now remember, they only asked 2. Okay, but I'm going to go through all of them, but you only need to write down 2 of these. Okay. It said, implement tighter control measures over cricket balls because 200 balls were stolen. Yes. Advertise to increase demand for the product, especially the cricket balls, because the turnover rate is low compared to the jerseys. Sell only jerseys because the markup is higher and the turnover rate is better. The business is carrying a lot of stock, but particularly cricket balls, 900 on hand at the end of the year. The stock for the cricket balls must be turned over quicker. You should consider another supplier, importing them because the price increased by 50% from 120 Rand to 180 Rand. Consider changing the markup on the cricket balls to ensure higher sales, in other words, to make it a bit cheaper. Consider another delivery service to reduce the carriage from 8,88 per ball. Do you see, every time they say something, they quote a figure, an amount. Okay, so it's very important when they say that you quote figures. Okay, so that was question 4. I'm afraid we're not going to have time to go into detail for activity 5. I would just like to give you some pointers though when you do this. This activity links to activity 3. And you will see it's also, you are provided with information relating to Fit World, Fiona Fits the owner, and then they give you the 3 different products: the energy drinks, the energy bars, and the t-shirts. And now you have to identify a problem first of all with each one, and then you have to give solutions. Okay, so if I can just point you in the correct direction there, let's look at it. For the energy drinks, you will find that there's a high level of closing stock, 2,400 units, and that they overestimated the demand, which led to high stock levels. There was a high markup, okay? All orders were satisfied, which indicates that demand was overestimated. What can you do to prevent that? What's the suggestion? Reduce the markup to get rid of the excess stock, okay? And to increase the sales volumes. Okay, there it says to reduce the stock levels. Order only what is required so that you don't have so many stock on hand. Okay, the energy bars. The problem there was that some of the stock was stolen. If you do your calculations there, you will find that 4,000 units went missing. So there's a lack of control over stock. So you will give suggestions on how to improve stock control. So you will say implement internal control measures over the stock to avoid theft. Regular stock counts, documentation, division of duties is always an important one when it comes to internal control. Okay, and then with regards to the t-shirts, it said Tiffany working days mentioned, lack of stock to satisfy orders. In other words, they ran out of stock and they couldn't satisfy the customers. Tiffany worked only 180 days out of the 240 days available. Due to her absence and the lack of available stock, Tiffany has not taken advantage of all the orders that were received. And how can she improve that? Tiffany's attendance at work must be monitored, and the ordering of the stock needs to be planned better. Okay, so when you go home now, go through this again, but I've just given you some indications. Okay, I hope we've got time for some questions. Let's see. Okay, there we've done that. How to calculate the gross profit. What is the... I'm not sure what you're asking there. How to calculate gross profit? You say sales minus cost of sales to answer that question. Okay, I think I've answered all the other questions. So let's quickly recap. We've got 4 different methods. The FIFO periodic, FIFO perpetual, weighted average periodic, and weighted average perpetual. When you use the perpetual inventory system, you will calculate cost of sales whenever sales takes place. Okay? When you use the periodic inventory system, you will first calculate the closing stock, and then you will calculate cost of sales. For first in, first out, you assume that stock purchased first will be sold first. For weighted average, you calculate the average cost price per unit whenever sales takes place. Okay, so I hope that you will have confidence when you go and answer these questions on stock in the exams, because as you see, it's really not that hard, but practice makes perfect. So if I can give you some good advice, go and do these activities again, because that will really help you. Okay, and good luck with your exams.